Hi, Luke Fannin here at AIT, and in this video I'm running through the BPP pass cards, chapter 10, which looks at tests of controls. The BPP pass cards are really good revision aid, and just run through this as an example to show you, and I'd highly recommend them because they cut to the core of the issues in relation to tests of control, for example. This looks at each of the main systems and the internal controls for each. So on the second page, it starts with the sales system. And due to segregation of duties, it's divided into three main parts. And you can see here I have three main segregations or parts in each system. So the sales system, purchase system, payroll system, we can divide them into three sections. And it sometimes helps for you to know the sections, what the main controls are in each, and it'll help you then determine weaknesses and then maybe tests of control you need to do. So in this division, number one is the sales department, number two might be dispatch or goods in or out, and three, accounting, credit control. And you can see the main controls for each. Dispatches are recorded. Sometimes invoicing, maybe you could argue, is under accounting. And all dispatches are recorded. All dispatches are recorded in terms of quantity and quality. And then how I suppose are the aims of the control, and how they do that is checking back to the goods received note, or the sales order. You want customers to acknowledge receipt of orders so that they can't claim they didn't receive it. So definitely you want your driver or whoever's delivering the goods to sign that they've delivered them, and ideally get the customer to sign, but it's not always possible to get the customer to sign. And then you want physical controls that goods are safe from theft and damage. So they're the main controls in the goods in or out. And then accounting, I suppose invoicing is correct and it's for goods supplied, is the main control. And then it's talking about recording transactions and cut off correct period, and then bad debts identified with steward valuation. And I've just listed the main documents for each. The sales order, which is generated by the sales department. It's an important source document for the auditor because it allows the auditor to test completeness of sales. So the sales department will have the total sales transactions for the period. That should be reconciled with the financial statements, and the direction of the test will be important. The auditor will pick sales, start in the sales order outside the accounts, and trace back to the financial statements to check for completeness. Goods received note is the main document produced in the goods in or out department. And then these are invoices, credit notes, bank recs, receivables control account, age analysis of receivables, bad debt correspondence, bad debts write-off, bad debt provisions, correspondence with clients. They're all documents that the auditor will need to look at when they're doing their tests of detail, and also some control account testing or internal control testing. So the controls. So in the auditing department's segregation of duties, it talks there about credit control and the difference between credit control, segregation, invoicing, dispatching, accounting. So main controls in credit would be credit terms. So that suppliers or the customers don't exceed credit limits, that all customers are authorized. And then sequential numbering is a very important test. It allows the auditor to check for completeness. Correct prices quoted, and they should come directly from the authorized price list, the standing data that's in the master file. And there should be access controls on the master file. So only certain people, a very limited number of people, should be able to change the standing data in the master file. And standing data is things like authorized prices, customer details, bank accounts, those kind of details. And if we were the auditor and we wanted to test some of the controls, we would pick a sample of customer accounts and test for evidence that they were authorized as a new customer, test that there were credit limits in place that didn't exceed their credit limits. We would match sales orders. Okay, well, matching orders, one of the important controls that happens in the auditing department is to follow up on outstanding orders. And how they do that is they should receive a copy of the goods dispatched note. Should I say goods received note here? I did. It should be goods dispatched note. Let's change that because the goods are being sent out. So the goods dispatch note, a copy of that should be sent from goods in, goods out from dispatch to the sales order department, and then they can match them with their sales orders to know if there's any outstanding, and then outstanding orders should be queried. And so one of the controls that the auditor will do is to see that where did they match. Is there a file where sales orders are matched to goods received notes to see if any orders are outstanding and what follow-up was done. And that's the verifying matching of sales invoices with dispatch notes there. The second main area is dispatch, and the authorization of dispatch really is that any dispatch needs a sales order, and the examination, the big quality check that's there for quality and quantity, that the people in dispatch examine the goods to make sure the quantity and the quality agrees with what was ordered. And like again, sequential numbering allows the auditor to test for, or anyone to test for completeness if there's any missing documents, so that's really important. And then we're looking for the signature of the customer on delivery notes, or at least the signature of the driver or the person delivering the goods if we can't get the customer. And the test that you do for that would be get a copy of goods. So let's pick a sample of goods received notes and look for the signature, the employee signature on them to say that they did the check. So here it is here. I said look for staff signature on the goods dispatch note to say they did the quality check. And also the auditor would look at the level of customer returns for damage. So if the goods out department were doing their quality and quantity checks properly, there should be low level of returns. But if returns are high, then you'd have to investigate that as auditor to see why were the goods returned, and it may be that the staff weren't doing the controls, the check like they should be. Accounting and recording, and I'll kind of move invoicing down around here, is that invoices pick prices from the master list. They should agree with what's on the sales order. All that should be linked in with the system. Checks on invoices. If you've got a computerized system, you probably don't need to do that because the invoice will be calculated properly. Other controls that are in place. So the main control is invoices are sent, generated and sent for all goods dispatch note. That's the main control. So a copy of the goods dispatch note is sent to whoever is responsible for invoicing. So a goods dispatch note generates an invoice, I suppose is the thing, and it's only at that point an invoice should be generated. You shouldn't recognize, because an invoice means a sale is going to be recognized in the accounts, and you shouldn't recognize a sale until the goods have been dispatched, and ideally until the customer has acknowledged receipt. But normally an invoice is recognized or generated on dispatch. And some of the other controls here are in reconciling cash received or customer accounts, following up on late payments. They've got here reconciliations of control accounts. So the auditor will look for evidence of these kind of reconciliations. We'll do reconciliation between a sample of invoices and see was there supporting goods dispatch notes and supporting standing orders, and go from the other direction. For every sales order, was there a goods dispatch note? Was there a matching invoice? And inspect reconciliations and then redo some of the recs would be the tests. So inspect a sample of receivables control accounts that were done at the end of each month, maybe, and then redo some of those control accounts to see that they were done properly. Purchase system, once again, is divided into three. The main documents in each section are purchase requisition form, which is the start or the commencement of the purchase cycle. So purchase requisition form is where someone in the functional area needs a new laptop, for example. They go to their head of department and that person approves the purchase on a purchase requisition form. That then purchase requisition form is sent through to whoever is responsible for purchasing. And so it says here authors are authorized. So the purchase requisition form gives evidence of authorization. Then made from authorized suppliers at good prices. Well, that's where the purchase order form comes in. The purchasing department, if there may not be one, it might be only one person, but whoever is responsible for purchasing should use a purchase order form. They should have a list of authorized suppliers and they should try to get the best price, the best quality. And once that's agreed, they create a purchase order form, which is an agreement with the supplier. Then the goods will be received eventually at some stage into the goods in department. And the big control is they should only be accepted from authorized. So the person who goes in should agree to the purchase order form, which they should have been given a copy of. And in the dispatch, the goods in department, the key documents are goods received note, the supplier invoice, which they'll receive maybe as well, and any returns or debit notes that are generated for returns. And the accounting department, the main control is expenditure is only for received goods. So the company should only pay out when it's certain it's received the goods and the price is what was agreed. And how that's done is the person who's responsible for paying, so payment is only made once there is a supporting purchase order and goods received note agreed to the supplier invoice. And then at that point, payment can be made. And it said it must be authorized, properly record, correct account, correct period. Okay. And the key controls or the key documents are supplier reconciliations. Once again, the supplier invoice, I suppose I could put there as well. And then the returns documents. If we've got return documents like for a debit note or anything like that, and supplier invoices. So we'll just look at the controls then after that. So the controls, main controls are the use of pre-numbered purchase requisitions, the use of pre-numbered order forms. So pre-numbered is sequentially numbered. Central policy for choice of suppliers. So use of master authorized supplier list that goes up into master file, standing data. No one really can change it, only a select few people. And it says monitor for most favorable. Okay. And it talks about segregation of duties between requisitioning and ordering. Yes. And that's done by the management in the functional area, and then the ordering is separate, done by a purchase department or someone responsible for purchasing. And the test, the controls, would be the auditor would test the controls around the suppliers, around the master file, the standing data. Is it possible to change the standing data on the master file? So use test data, try to delete suppliers, try to add a supplier without authorization. The system shouldn't let these things happen. If there's any changes made to suppliers by authorized people, is there an audit trail of those changes? If you want to check or gain evidence over controls on purchase requisitions, well, you come back from invoices to see that they're supported by goods received notes. Authorized is the purchase requisition form. Price correctly, quoted correctly, comes back to the purchase order and goods received note. Oh yeah, and always numerical sequences. So take a block sample as auditor and can help you check sequential numbering, so block sample, pick a sample from number 20 to number 60 inclusive. And if there's any missing, which there shouldn't be, query any missing documents. Goods received department, the main controls there are to examine the quality, compare the goods received note with the purchase order and the supplier invoice. So the auditor would look for evidence that check was done. So on the goods received note, there should be some signature say that this check was done. And also look at the level of returns by the client. And if there's high levels of returns, it might indicate that this quality control check wasn't being done. The accounting department then, the main thing is payment is only made if the goods received note and purchase order agree to the invoice. So once you get an invoice, no payment is made unless the supporting documentation to say we order the goods with our purchase order and we receive the goods, and the evidence of that is a goods received note. And then reconciliations is always done in accounting. Cut-off procedures are important to make sure it's recorded in the correct period, particularly around year end. So on goods, if goods are received before year end, so if the goods received note is dated, if the year end is 31st of December, if the goods received note is dated on or before 31st of December, they should be recorded in purchases for the period, debit, purchases, credit, payables, and also they should be included in the inventory count. And if that wasn't done, you'd have to debit cost of sales, debit closing inventory in the current assets, and credit cost of sales, which, because your closing inventory reduces purchases. And then there's some tests of controls. If you want to check the reconciliations were done, the auditor will pick a sample of months and look at the reconciliations, look for evidence reconciliations were done, were approved by management, and redo some of the reconciliations. The auditor would actually pick some of those reconciliations and redo them. The auditor would pick a sample of invoices and check that there was supporting and matching documents such as these. So they're all important controls and tests. Inventory system is next. So there's the aims of the controls. There's some of the controls there. And an auditor has a lot of, the inventory count is a big procedure and a very important procedure done by a client. And the auditor has kind of responsibilities to do before the inventory count, during the inventory count, and after the inventory count. And all of these tests that I've mentioned in relation to the inventory count, some of them are done before, such as review the count instructions, and the during, where the auditor would observe and test inventory counts. And after the count, some of the tests would be to ensure discrepancies are investigated, authorized, and corrected. To maybe the auditor would, as well as doing their own sample. So during the count, they might do sample counts themselves. After the count, the auditor would do a test of control where they check that their sample count agrees with what the staff counted. So there's more detail on that. We're not going to go into in detail. So there's some other tests. The cash system. So it's nice all on one page. So if there's cash received in the post, safeguards at post opening, so 2 people there to make sure that one person can't, pocket cash. So one person is there to look at the other person. Stamp any receipts. Yeah, none restrictions on receipt of cash. Okay. Anything to do with cash registers, cash collection, till rolls. So any discrepancies should be investigated. Prompt Maintenance, okay. Any cash should be kept secure, should be in a safe, and should be banked frequently. And then if there's anything like refunds, so I mentioned tills here, refunds should only be given where customers proof of purchase. And then this should be linked into the system. So your cash register, if you ever go into Aldi or Lidl with a refund, they scan the receipt, they find the item on the in your receipt, then they scan the receipt and it picks it up on the system, and the system authorizes the refunds. If there's anything outside of that, so a refund over a certain amount or without proof of purchase, then those type of refunds, an important control would that management need to approve it. Otherwise, you could have someone working on the till, and they could have an arrangement with their friends where their friends come in without or just with items and get refunds on them, because the employee is able to do it without proof of purchase, and it doesn't need authorization. So that's why those policies and procedures are important. And there are some of the tests of control. So, and then if you want to test some of these, uh, look for a sample of refunds and then look for the supporting documentation. So normally they keep your till receipt, sometimes they don't. Ideally, they should take a picture of it or scan it, because sometimes the customer wants the till receipt back. But look for evidence, look for a sample of refunds, and then look to see what supporting documentation is kept and how it went through and how it was authorized. Was it authorized by management, or did it meet the criteria that it was automatically authorized by the system? On this of the Banco Daily Banking. Okay, authorized signatures on checkbooks. Yes, all of those are fairly straightforward. The next section is payroll. It's a bigger section. And once again, I think that's divided into three areas. The HR department, the functional areas such as sales or marketing or production or accounting, whatever the area is, and then the accounts department. And we've got lots of controls here, but some of these can be divided up into, so segregation of duties is the first control. Well, how you achieve that in a company is you have a HR department, you have the other areas, and you have accounts department. And each has different responsibilities. So you can see there, HR department, looking at contracts, updating employee standing data in the master files, such as joiners, leavers, new bank accounts, all very sensitive information and really important information. If someone leaves the company, you don't want the company to continue paying them a salary. And the controls in the HR department would be standardized contracts, application controls over master files, so over the standing data, so authorization needed to change any of these details, such as their standing data, their bank accounts, joiners, leavers, procedures, so that when someone leaves or someone joins, that the master files are updated, and then reconciliations. The functional area, if we look here, supervision, clock in out machines, payroll budgets, forms for recording hours, and then management would sign off on those hours for part-time staff. They're the kind of controls in the functional area. And the accounts department then is they're responsible for calculating deductions, paying the wages and taxes, calculating the taxes, any things like pension deductions, union subs, very complicated. And then see, these are some of the controls, application controls on the payroll system, reconciliations done between wages paid and HR records, payment direct to bank accounts, so no cash payments. It's much better to have payments made directly into employees' bank accounts. And then payments are only made if once authorization is made. So that authorization will come automatically if it was a monthly paid employee, if they were permanent. And then authorization for part-time staff, you'd need a wages claim form signed by the employee and by the management. So tests of controls are there. And lastly is revenue and capital expenditure. So that's really important. All invoice, pick a sample of invoices and look for supporting purchase orders and goods received notes. And the auditor of tests and controls would look at additions in non-current assets in the year, look for supporting invoices and purchase orders to see what was the item capital in nature or revenue. And likewise, the auditor would have to look at the repairs and maintenance account, pick a sample of transactions, pick some of the bigger ones who are important as well, and check to see the nature of those transactions. Look for supporting documentation and query anything which seems maybe that was capital in nature that's been recorded in the repairs account, and likewise query anything that's the auditor doesn't understand fully what it is that's recorded in non-current assets. And they're really important tests in relation to capital and revenue expenditure. So thanks for watching. Like I said, they're the BPP revision aids, the pass cards, and they're really useful. Thanks for watching.